would say probably, obviously, it's the U.S. stock market, and what I think we have entered, which is a parabolic final stage of what I've talked about as a 43-year secular bull market that started back in August of 1982. What we're seeing here is a steepening of the rally as you move into the end. And I had talked about this several years ago, that this is how it would likely end. I think we have reached that stage where it's a relentless rally. Doesn't mean you won't have sell-offs day to day, or that you couldn't see a 3 or 4% sell-off at some point. But mostly it's going to be upside and upside steep, led by tech. But there's lots of other groups that are starting to participate as well. And I am raising targets that are already extreme relative to anybody else on the street. I think people are coming my way, but still far below my targets, and yet I'm raising them again, and raising them pretty significantly. I think my S&P target is being raised to 9,500. Had been at 8,700, so that's a big number, and already was, as I said, way beyond anybody else. My Russell 2000 number is being raised from 3,400 to 3,800. NASDAQ 32,000 from 30,000, and the Dow to 65,000 from 60,000. So these are crazy numbers, and I do say that we're in a parabolic, so it could happen in a matter of a few months that you get to those targets. It doesn't have to. As I say, there's no, the clock's not going to strike midnight on December 31st, and the market has to be done by then. It could carry over into the first quarter of next year. But whatever it is, it's fairly short term, because parabolics burn out. You go almost vertical. You cover an awful lot of ground in a short time. So whether it's 2, 3, 4 months, or a little longer than that, even doesn't matter to me. But we're in that stage, and it's obviously the thing that caused me to raise targets is because although the retail public has been bullish, and surprisingly was bullish last April when everybody was bailing out, they learned their lessons and said, we're getting opportunities to buy lower, I'm going to buy. So the retail public's been pretty savvy about this and stayed right through that period when everybody got nervous. The institutions who have fought this market from the October 2022 low all the way up and kept saying it's a bear market rally, and then when it went to new highs, they said, okay, it's not a bear market rally, but valuations are so high that the upside is limited. They've still been saying that right up till now, but you're beginning to see them finally say, we got to get on board. This is a momentum train. And so you're seeing targets getting raised on the street. You're seeing institutions having to get more aggressive or allocate to more equities. So because that's just beginning, it tells me you're going to have a pretty big rush into the market from institutions here in the next, this quarter. So that's basically why I say, I've got to raise numbers, because that's going to create a pretty big run up here.
And what are the signs you'll be watching for to know that this parabolic melt up is reaching its final end phase and we're headed for that large correction that I know you've spoken about on this show before? I mean, from an investor psychology perspective, is this just the moment of peak euphoria is when the floor falls out underneath you? Or what signs are you looking for, both in terms of market sentiment as well as any technical indicators?
Yeah, so from a standpoint of a top, yes, it's when you get this all-in type of a mentality where people are now saying, well, the Fed's at our back, we have a new easing cycle. This is what I expect from the institutions. And this could carry for, a year or two or even more, because easing cycles go on for a while. When you start hearing that, this is a bull market that has legs and can carry, that's the beginning of the end. Because as I said, the thing that's kept me so bullish has been that the institutions have been so cautious and so skeptical. When they lose that skepticism and they're on board and fully on board. It doesn't mean you can precisely know that's the end, but it tells you you're in a very late inning point in the market, and anything from there is, you just have to realize that you're going to go someday, and I don't know what that day is, but you're going to go someday from a spike up to a spike down, where you're chasing it, and then all of a sudden it comes to a stop and you're down 10%. And I don't mean it has to do that in one day, but it's going to reverse quickly from the top. It may reverse quickly, go down a bit, 10 or 15 or 20%, bounce back up towards the highs, get back within 5 or 7% of the highs, and then go down. It's hard to know exactly how we'll see it happen. There may be news that triggers some of it, or there may not. But the key is to understand that we are in late innings here. The problem is that you can cover what would normally take you 3 and 4 years to earn returns. You might get in 3 months. So getting out too early, like now, because you have lots of people saying, "Oh, I'm getting out because I can't time it." The problem is if you go up 30 or 40% from here, the likelihood is those that get out now are going to be forced back in. Psychology works in such a way that it's going to be a strong urge for them to say, "Yeah, but people are saying this could go on for a while, for a couple of years. I got to get back in," and then you end up getting back in near the highs, and it rolls over. So it is a tricky time because time-wise, this is time when you really should be starting to say, "I can't be, nobody calls this perfectly. I can't know when it's going to stop. I'm getting out." But just understand that because we're in a parabolic and because we're in what I think is a very historic market, you can cover years worth of returns in the next few months and try not to get out too early.
I'd love to get your thoughts on gold at present. I believe the futures market has already surpassed $4,000 at this point. Gold's been on an epic tear. What is this rise in the gold price telling you more broadly about the global economy, about the value of the dollar and other fiat currencies, and about financial markets?
Yeah, first of all, I raised my target to 4,000 from 3,400. I don't remember when it was, a year ago or whenever, but and it's there basically, as you say. In this letter, I am raising my target to 5,000. So I've had a lot of people of late on X, a lot of my followers going, it's at your target or it's almost at your target. What do are you getting bearish or what's happening? I said, you got to wait for my letter because my subscribers get it first. But so I've raised it not by just a little bit, but to 5,000 because for the very same reason, institutions hardly talk about gold. They're hardly invested in gold. Most institutions don't even have allocations to gold. So we're still in that stage where you still have, and they will jump on board. The institutions will finally, you're starting to hear noise about maybe we need to allocate 10 or 20% to gold. Maybe we need to at least have an allocation to gold, whatever. So it can be a very thin metal, and the metals in general can be very thin when you have institutions all of a sudden getting on board. So because that's just beginning, I felt I needed to have a pretty big upward adjustment to my target. So 5,000, it's what I call my pre-bust target. So it's it could happen early in the bust, but certainly most of it's before the bust. And then I think it'll get hit like most assets in the global bust that follows. So is it telling us something about the economy? Is it warning us of trouble? I'm sure there's some of that in there because I do think we are moving towards that. But if you kind of look at where the consensus is, the consensus of investors and of economists are they don't see anything on the in the near term horizon or even in the intermediate horizon that suggests anything like what I expect, which is a global bust. So I don't really think some smart money may be doing that. I think it's mostly momentum. it's it's also, I think, recognizing that the dollar is about to have another leg down. So, we moved $14. We moved 14 figures down from 115 back a few years ago or a couple of years ago to 96. We've consolidated that run down here in the last few months, and I think the next leg down takes us down 90 on DXY, maybe even my target ultimately is 82, probably in the next 6 months. So the gold may be smelling out some of that weakness because clearly the Trump administration is not a strong dollar, doesn't have a strong dollar policy. I think they see it as a benefit, see weaker dollar and help competitiveness in the U.S. for our companies. Um, and at some point the dollar will reverse, but for the next 6 months, I think it's a weak dollar is a big part of the story. You've got obviously a war in Ukraine that is not showing any signs of letting up. We may see peace in Gaza, so that may be a story that could cause a little bit of a counter move in gold down and the dollar up. But I think ultimately the gold story is really about the fact that it's at all-time highs, and a lot of investors have missed it and are now starting to climb on board.